Welcome to Markets Now. I'm Michelle Rook along with Randy Martinson Ag. And we ended with a lower day in the grains, a little more mixed over in the livestock futures. Randy, let's talk about the grains first of all. Corn dropped below and closed below key support last week. And we are seeing some follow-through selling pressure today. Is this all technical selling, and how much more liquidation do you expect from the funds here?
I think most of it is technical right now, but I think it is being mixed with a little bit of fundamental, where maybe the trade is expecting that USDA is going to reduce either corn exports or ethanol demand or feed demand in the next report, on Friday's report. So I think it's a combination of that. But yeah, we did some damage to the technicals last week. We verified it today with more selling. Right now, if you look at the charts, we could test that 625 level before this thing is done.
And you mentioned exports, and inspections this morning were a little bit better in terms of now we're only 33% behind for the year to date instead of 50% behind, but that's not real. We're not going in the right direction in enough of a hurry, are we?
We're not, and then you look at the charts. I mean, the pattern that we've seen for exports in the past, and normally China doesn't come in and start aggressively buying U.S. corn until about week 20. Let's hope that still holds to be the fact here. But right now, you're right. I mean, we're going the wrong direction in corn demand, and we're doing it fast. And it's going to be tough at this point to be able to recover to get to USDA's projections. So it's likely we're going to see a reduction of some sort, whether or not it comes in the December report or whether it'll come in the January report.
Yeah, I was going to ask you which report you thought it was going to come in, but it's really going to be hard to tell here. Actually, it'd be nice to see it incremental, because if they rip the whole Band-Aid off, it could be kind of ugly. Wheat market is also dragged down corn, and wheat's got a lot of problems on its own in terms of the technicals, right?
It does. I mean, Chicago wheat was horrible last week, and it just continues to compound its problem this week. So right now that's at, 13, 14-month lows. I mean, lows we haven't seen for a long time. And it doesn't look like there's much that's willing to or ready to jump in front of that train to stop that from rolling. And then you throw into the fact that you continue to see, like, Australia's production increased in their estimates here today. Argentina is still having some trouble, but at this point, we're not too worried about Argentina. We're more worried about the huge supply that's coming out of Australia.
Yeah. And that was a record production number. How much of that is going to be feed wheat, though, because they've had a lot of rain here during the time they're trying to get the crop out. So some of it's going to be feed quality, isn't it?
It is. I mean, they upped their production estimate by 4.4 million metric tons in September, so it was a big increase. But I think a majority of the production that is going to be feed. I wouldn't be surprised to see somewhere between 30% to 50% of the production from the country making feed. It's still, I mean, it's going to lower its value. It's going to change its direction where it's going to head, but it's still wheat that has to move through the system.
The other thing that happened during this session, crude oil started off higher, the dollar lower. Those flipped during this session, and the dollar went sharply higher, which didn't help wheat or really any of the grain complex, did it?
It didn't. I mean, we thought we had the dollar moving in the right direction. We're starting to see a little bit calmer attitude towards the Fed and what they're doing with interest rates right now. After Chairman Powell's talk last week, we're kind of comfortable with a 0.5 point increase. So that kind of relaxed the market, and it was helping to put pressure on the dollar. But today, once the crude oil flipped and started to come under some pressure, the idea is that China's coming out of lockdown. That helps support it early. But I think the idea that Russia isn't going to be selling too much crude to countries that are going to support their cap, I think that kind of pushed the market late, or pressured the market late.
And the easing of the China COVID restrictions certainly did help out soybeans early on there. Plus, you're still kind of trading Argentina's weather and whatnot. So January beans only down 0.75 cents for the day. But the real problem there has just been this soybean oil market, hasn't it?
It has been. I mean, that just seems like it's on a fire sale right now, and it continues to crash. And so, yeah, the bean oil market continues to drag it down, and that's all because of the disappointing RFS numbers that came with last week. On the flip side, it's putting support into canola, which, we're seeing some spread trading take place between those two, but we're also seeing spread trading between meal and oil.
Right. So meal was higher today. And like I said, soybeans end about flat, kind of caught in the tug of war between higher meal and lower soybean oil. The funds are still really long in that oil market, though, soybean oil market, Randy. And so how much more could they press this thing to the downside?
Well, I think we got a ways to go yet before we're done. I know there was talk of possibility of pushing this down into the $50 level, and that might be a little bit aggressive to see it go down that low. But I would expect that we'll see a more pressure before this thing is settled out.
Early strength in the cattle market, of course, feeders leading with the pullback in corn, but we actually saw bear spreading develop in the live cattle as we went through this session, and we closed with the nearby contracts just a little bit lower. Okay, so that market is kind of trading right now. I would say counterintuitive to what the cash trade has been doing, and especially since the nearby is trading at a discount to that cash.
You're right. And I think, part of it is that, we've pushed pretty good. Cash last week was steady. Boxes were a little bit lower. I think it's more right now on the short-term demand side of things, where right now beef isn't the feature. We've seen a little slowdown in the exports. And I think getting to the end of the year, this market, I think, is now going to look to transition into what's expected to be really tight supplies once we get to 23. And I think that's more what we're looking at. We're seeing a little slowdown as far as the cow slaughter numbers are concerned. And that's helping a little bit, but we still have plenty of beef hitting the market to meet the demand that's going right now.
Yeah, and boxed beef was down for the week in both the choice and the select. So obviously, product a little bit sloppy here, to your point. So the hog market, we started off with some strength there and are ending mixed on the day. The February contract's up about 10 cents on the close here, but hogs scored 2.5-month highs last week. Just when you think that market is kind of put a fork in it, we see the funds step back in here and buy. So where do you think we're ultimately going in this market? Or did we just correct our oversold status?
No, I mean, I think we got a market that's going to have some legs underneath it again. I think, again, leading back to the idea that, if China does start lifting some of their restrictions, they're going to have some extra demand or some increased demand for pork. Their exports have been slow. I think they'll start coming back to the market, and we'll start seeing exports pick up for pork. And I think that's really what the market is looking forward to.
All right. I was going to ask you if you thought maybe we were building in some of the China optimism, especially in the back months. And that's exactly what you're saying, isn't it?
That's exactly what I'm saying. Yes.
Okay. Thanks so much for joining us, Randy Martinson with Martinson Ag, and that is Markets Now.